Hello and welcome back to AEF-TV. I'm joined now by Tas from the African Development Bank, and we were talking a little bit off air, and you mentioned there have been a whole session about new investment vehicles for infrastructure that the African Development Bank is creating. Just to tell us a little bit more about what's so new about the new investment vehicle.
Okay. Thank you. As you know, that African Development Bank is one of the main infrastructure financiers in the continent, and in the last 6 years, actually, apart the public sector projects, we've been focusing mainly on private and public-private partnership type of projects in infrastructure. Reason for that is, you know, that the government budgets are getting decreased every year, and development finance...
That's not just an African problem, that's a worldwide thing.
Actually, that's why development finance institutions are not able to increase their capital as much as they want, because they are actually dependent on donor financing. So despite of being very successful through 49 PPP or private sector projects in the continent, in transport, energy, ICT, and putting $3 billion from our resources and catalyzing $4.6 billion from the market and delivering $32 billion infrastructure projects in the continent, then we ask ourselves the questions, where are we today? And the answer is very basic. Everybody knows that. Today in Africa, every year you need $100 billion investments for infrastructure. 50 billion is invested, the other 50 goes not funded, means gap is 50 billion. Actually, I see this as a gap, but I also see this as an opportunity.
And that's what the new investment
vehicle will be targeting.
Yeah.
And also when you look at the market, actually infrastructure markets in Africa, what happens is any project from idea to financial close is 7 to 10 years. And please add 3 to 5 years construction period. One project to come to life and be operational is 12 to 15 years. This is too long. There are reasons for that, because there are some issues we have to all together make a solution for those issues. What are those issues? Lack of well-prepared projects and early project development capital, and also governments, they don't have human capital, but they don't also have financial resources to prepare those projects. And simply, 5 to 10 projects come to the financing every year. But what the continent needs, $50 billion investments. And then second thing, actually altogether, commercial banks or development finance institutions, none of us, we accompany the project from idea to all the way to the operations. So different players, they come to the project financing at different time scales. And then project sponsors or developers try to go to one entity to another entity. It's a big time loss and big delays happen. So therefore we decided to create a new vehicle which will be more flexible and efficient than our own business at African Development Bank, but also the most importantly, this vehicle will be able to increase its capital and scale its capital through the capital markets. How we are going to do this? The new vehicle, first of all, will be a corporation, legally and financially independent. It will have its own rules and regulations, and it will have different kind of class of shares to attract different type of investors. It will not be donor finance, but it will be raising capital from institutional investors, using that capital in the capital markets, scaling up to 2 to 3 times.
So this is like almost like you're using share offerings to create the investment capital, and then by having that investment capital, you can go in and start working with the project. And you're saying you want to try and work with the projects from idea to delivery, all the way through?
Yes.
So let me ask you this question. So you've done this. So imagine this has happened. The institutional investors have said, okay, great, but what we're going to invest in this. My immediate question is, there's still risk attached to that investment. So how are you going to convince people to invest in this new vehicle when, at the starting point you've got no projects on the books?
Yes.
What's the delivery track record, and all those other questions that you will be asked?
These are very, very good questions. let's start with the risk. Actually, Africa is seen very as a risky platform. We invested in 49 PPP and private sector projects. We don't have even $1 write-off yet. When you structure those projects very well, these are all project finance, I think it is very difficult to lose money. That's one thing. And secondly, we are not going to start fresh. This is actually African Development Bank incubated vehicle. We have the track record, we have the convening power, we have the relationship with the governments and private parties and also other financiers. We will be building on this. That's why we call it on the shoulders of the giant, which is African Development Bank. And this is not going to be pure green. African Development Bank, first let me touch this. We know that when we go to the market, people are going to ask, what is your seed investment? It is very important to give the right signal to the market. That's why two vehicles, project development and project finance, African Development Bank will be the corner investors. For the project development component, we target 500 million, but we put 100 million from our resources. For the project finance component, we target 3 billion, but we put 500 million from our resources. So, number one, we bring our track record, our institutional memory, our relationship with the governments, but also we bring our own investment.
So, if I understand this right, so this is almost a way where an institutional investor can invest in Africa, but they aren't investing in a single power project. They're effectively investing in what will become a portfolio of power projects.
Yes.
And that in itself creates an element of de-risk, because if, heaven forbid, one of them fails,
yes,
you know, all the others are still running.
Exactly.
Is that sort of the thought
exactly.
there?
And part of the African Development Bank's own investments will come in kind, means that existing projects. So it will have some return actually from day one. And secondly, one of the best way of de-risking projects is preparing them very well to bankability, back-to-back contractual agreements. They are all linked and they are all vetted by international advisors, and they are close to perfection. This is one of the best way of de-risking projects. And when we look at the institutional investors, what they expect from us, number one, they expect return from Africa50, which we will provide. For the project development component, we will be providing 15 to 16% return over 10 years. For the project finance component, we will be providing 8 to 9% return over 15 years. Actually, when you compare today, where institutional investors are investing their money, our return is quite high and quite reasonable.
And you're also appealing to this need within institutional investment, where they've had some of their traditional cornerstone investments that have been the bedrock of, let's say, some of the pension fund investments that have provided the gradual and predictable growth. Those traditional investments have gone away. So yes. I suppose one of your ideas is to try and attract people with that need, yes, with some sort of replacement for some of those
simply creating a new asset class called infrastructure assets. Because today Africa still offers long-term contractual agreements, such as power purchase agreements or traffic guarantees for transport projects. What institutional investors like pension funds are looking for? Long-term, steady returns for matching their long-term liabilities.
Which has been wiped out in Europe because, you know, the way the utility market is structured, a lot of people are pulling out of that and going, this is too risky for me, because that traditional thing hasn't worked. So we're sort of coming to the end of our sort of 10-12 minutes here. So one of the other questions I've got for you is, okay, I understand how this is now going to work and put it in place, and it makes sense. What are the targets, though? I mean, what are you trying to achieve? If you come back here, probably not next year, that may well be too soon, but in a couple of years' time, what's the picture?
Actually, you can even say next year. I'm
right?
ready for that.
That's
because
aggressive.
what we were doing, actually, it is actually not aggressive, but bringing the efficiency and flexibility into Africa. Yeah. Because we've been actually structuring, fundraising, establishing but also preparing the portfolio concurrently for Africa50. Because the message as the African Development Bank we want to give the market, business as usual is not working, game needs to change. And we see Africa50 as a game changer for Africa. Therefore, we have to also demonstrate to the market that we are doing the business differently. So therefore, for 2014 and 15, actually we have several projects identified. Those are opportunistic projects, but we would like to show market that Africa50 is up and running and operational. Therefore, we expect 400 to 600 million investments in the 2014 and also first half of 2015. But in the meantime, project development component of Africa50 will start developing projects, and those projects will be feeding our pipeline for 2016 and on. So as you see that we are already changing the game.
Because one of the things that a lot of people have mentioned is that one of the big issues of bringing projects to market is that phase between the idea and then that gestation period of feasibility and everything. So I think it's a great idea for you guys to own it, to use that phrase soup to nuts and so on. How many projects are you putting into this vehicle already that already exist in within African Development Bank? Because you mentioned that that's how you're seeding it, right? Yes,
actually we are not going to do the seeding 100% in kind. It will be a combination of cash and in kind because it's important. But this is not decided yet. We are currently looking at the portfolio. We will select few projects to bring over that will actually create the seed and then show the market that already some return is there. But having said that, actually all the projects we are going to finance in 2014 and 15, we've been watching those projects for the last 5 years.
Right.
We know those projects are going to go to financial close very quickly because we've been working on those very long time.
You guys haven't just suddenly woken up and had this idea.
Exactly, exactly. But in the meantime, I'm glad you brought subject is like long time from the idea to all the way to bankability. That is something actually we are very much focused on, and we know that project preparation and project development is very important, not only from the capital perspective, but also understanding that period and then what is expected from different players where we are highly experienced. That's why the current project development time frame of 7 or 10 years, we would like to bring that to 3 to 4 years. Number one, by using our development capital and leveraging with other people's development capital, by partnering with them.
And it's repeatable
and
as well,
also exactly, you can replicate it in different places. And also we always mention this in every single conference. The most important thing in infrastructure projects in Africa is preparation, preparation, and preparation.
Well, that's true with everything. And on that note, I think we're going to wrap up. And just quickly before we do, when is the fund scheduled to go live? Well, I mean, let's say I'm an institutional investor. When are you ready to receive my money? And we're being very,
Tomorrow.
Tomorrow, right? Okay.
Thank you. Thank you.
Thank you. Thank you as well for watching. There's been another interview at Africa Energy Forum, and this particular story, I think we look forward to following that and a follow-up next year. Yes?
Definitely. See you next year.
See you next year. Okay, thank you.